Hello everyone, here are the latest market news on October the 27th, 2020. Asian stocks pressured by US vs China tensions. On Tuesday morning, stocks in the Asia-Pacific region fell due to growing tensions between the US and China. The region's markets has plunged after the US won as stocks on the latest US stimulus stalled shortly before the November the 3rd presidential election. The Hong Kong Hang Seng Index fell 1.30%, the South Korean KOSPI Index fell 0.02%, while the Australian ASX 200 fell 1.72%. Tensions between the US and China have escalated after China imposed sanctions on US companies Lockheed Martin, Boeing and Raytheon in order to protect national interests. On the economic front, the Chinese authorities are to determine the country's next 5-year plan by October the 29th. China's Shanghai Composite Index fell 0.04%. Japan's Nikkei 225 is down 0.33%. The Bank of Japan will announce its monetary policy on Thursday, and Governor Haruhiko Kuroda will give a briefing. World foreign direct investment halved in 2020. UN reported on Tuesday that global foreign direct investment (FDI) fell 49% in the first half of 2020 compared to the same period a year ago and could shrink as much as 40% within a year amid fears of a deep recession. It says that global FDI fell as multinationals deferred investment to conserve cash. FDI flows to European economies turned negative for the first time in history, falling to $7 billion from $202 billion, while flows to the United States fell 61% to $51 billion. According to a report from the United Nations Conference on Trade and Development. Figures include cross-border mergers and acquisitions, new investment projects, and project finance deals. The industrialized countries were hit hardest, which typically account for about 80% of global transactions, which fell to $98 billion in flows, levels last seen in 1994. Twilio reports unexpected profits on demand boost. Twilio Inc. on Monday posted unexpected third-quarter earnings and sales forecast higher than fourth-quarter estimates as the shift to remote work and learning from the COVID-19 pandemic boosted demand for cloud services. Excluding items, Twilio's third-quarter earnings were 4 cents per share, while analysts had expected a loss of 3 cents per share. Unfortunately, the company's shares fell 1.2% during extended trading. According to IBES data, the company's third-quarter revenue jumped more than 50% to about $448 million and surpassed the $409.9 million estimate. Twilio's active customer accounts are up 21% to 208,000 as for September the 30th. Twilio earlier this month said it would buy Segment customer data platform for $3.2 billion in a stock deal. HSBC changes business model due to low earnings. HSBC Holdings plc on Tuesday reported a 35% drop in third-quarter earnings, less than expected as spending caps offset an increase in loan loss provisions. The lender also said it would revise its strategy in an attempt to make a commission-based business the main source of revenue. Europe's largest bank has also accelerated its downsizing plans and will cut costs more than previously thought. The planned changes to its business model mark one of the biggest strategy shifts to date for HSBC, which has long touted its ability to generate interest income on its over $1.5 trillion in customer deposits. Pre-tax profit was $3.1 billion for the quarter ended September the 30th, higher than the bank's average analyst forecast of $2.07 billion. HSBC shares traded in Hong Kong were up more than 5%.